All right, we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. Okay, the first big thing is that we've got some pretty impressive news that Norway is launching a cryptocurrency powered by Ethereum. Okay, I'm going to unpack all that, make you understand exactly what that means and what the implications of this could be going forward. Okay, I know, it's really tempting for a lot of people to check out of the crypto space right now because prices have been down. Trust me, I've been there myself. I went through all of 2018, 2019 when things were really, bearish. But all during that time, we saw an insane amount of building taking place. And that's what we're seeing now, and this is a really good example of that. So we're going to talk about that. We're going to look live with the news updates that have happened in the space since yesterday. Again, we do these live streams Monday through Friday, rain or shine on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to check on the crypto markets, check some of the trends on chain, answer some of your questions, and a whole lot more. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to know how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat. We got Culture Eyes, Above Realty, Code Chap, Mike, hope I'm saying that right. Maybe it's Mick, Tebo, Stefan, Dale, Ron, Pedro, Wake Dog, Automatic Beats. Awesome. Welcome. All right, so let's jump into this. Let's talk about, let's see here, Norway launching a cryptocurrency on Ethereum. Okay, so this is, this for some reason is not working. Let me just fix my webcam. Whenever I unplug my computer and plug it back in, my OBS stops recognizing my cam link. It's pretty annoying. Okay, so let's jump into this. So Norway central bank taps Ethereum layer 2 for CBDC trial. Now, there's a lot of terminology in there, so let me kind of break it down and explain each of those means. So basically, Norway's central bank is trying to launch a central bank digital currency. So this is definitely a big trend inside of the crypto space. Basically, a central bank that's, basically a central bank of specific governments want to issue whatever their fiat currency is in digital form. Okay, we're even seeing pilots for central bank digital currencies, inside the United States. We're seeing reports on this. This is a big trend across many countries, okay? And we'll talk about CBDCs here in a minute. A lot of people don't like CBDCs. I think they're anti-crypto. We'll definitely talk about that. But whether you like it or not, CBDCs are a growing trend. And now lots of people are wondering, hey, if you're going to implement a central bank digital currency, basically a digital dollar of some kind, how are you going to do it? Are you going to create your own blockchain? Or are you going to use existing blockchain infrastructure? Well, my opinion on this over time is that definitely it makes sense to use existing blockchain infrastructure to take advantage of the benefits of blockchain, okay? And my conclusion has always been that it makes most sense to do those things on top of something like Ethereum, which has got the best shot at, becoming the dominant smart contract platform while the network adoption is. And that's exactly what we're seeing evidence of here. Now, for a layer 2 trial. So what is that? Now, some people say, hey, Ethereum's never going to work for a central bank digital currency. It's too slow, it's too expensive, nobody's ever going to use it. Well, that's and we have to wait for Ethereum 2.0 to ship before we can fix that problem. But that's exactly what layer 2 scaling solutions are for. That's the long-term vision of Ethereum, scaling to get those cheap transaction fees, to get really fast transactions, the type of thing you need in order to make a central bank digital currency even viable in the first place. And that's what they're doing. They're trialing this on top of a layer 2. Okay, so with all that being said, let's kind of jump into the details. So Norway's central bank is embracing Ethereum layer 2 for its central bank digital currency CBDC pilot. So on May 16th, NAMI, this is the Ethereum layer 2, announced it had been tapped by the bank to host the sandbox for the country's national currency. Okay, so basically it's going to build and maintain and then trial the users in the sandbox environment. So let's see here. So basically, the bank has been exploring CBDCs for the past 5 years. In November 2020, the bank proclaimed Norway the world's most cashless society after it found out less than 4% of the nation paid with banknotes. That's pretty crazy. So at conference in November 2021, the central bank's governor emphasized that the goal is to have a secure effective and attractive payment system today and in the future. Okay, so basically they're trying to see whether CBDCs are going to be an appropriate measure to promote secure and effective and attractive payment system and confidence in the monetary system. Okay, so the introduction of a CBDC is an important and complex issue. We will give ourselves time to research the issue thoroughly, while at the same time preparing to be in a position to act if the need should arise. Okay, so like I was saying before, central bank digital currencies are definitely a trend that lots of countries are starting to go down this road. And, where we are right now, be super realistic, is that a lot of these in the trial phase. They're in sort of the sandbox phase, like this article was just talking about, where you can just test it out, right? Just you've got to get to the point where you can sort of just throw this thing in the water and see if it floats, okay? From two different angles. Number one, you have to make sure the implementation is actually viable, okay? That, that the thing's going to work. The other thing is it actually solving the need, like it's actually filling a need. Like we think this thing is going to work, but, are people actually going to use it? Does it make things better, faster, cheaper? Is there some sort of benefit that can be derived here? And that also has to be trial before it just gets rolled out into the masses at scale. Okay, and that's the phase that we're in right now. But it speaks volumes that they're wanting to trial this even on a layer 2, for Ethereum, and that's the kind of the trend that I see playing out in the coming months and years as other ones. Now it'd be interesting to see if the U.S. It kind of goes down the road of launching a CBDC, that's a central bank digital currency. CBD stands for central bank digital currency. If they will follow the same implementation path, I imagine that we will have learnings shared from different central banks so that not everybody has to reinvent the wheel. I think it's in everybody's best interest to share those learnings, all right, rather than just try to silo all that information, because, helping one another can become effective. Now, let's talk about whether central bank digital currencies are a good thing in the first place. I know this is something that gets a lot of people worked up, especially in the crypto space. I think they don't like central banks in the first, that's kind of one of the reasons that Bitcoin was created in the first place, is a decentralized store of value that doesn't have centralized control, created after the great 2008 financial crisis, which was, in many ways, rebellion against central bank, okay? Against fiat currencies, all that type of stuff. So a lot of people think that CBDCs are the anti-crypto, the antithesis of crypto values. And I totally get that. I think my opinion is if they're going to move towards a central bank digital currency, then it's kind of inevitable. You know what I mean? It's a driving force. And so how can you get the best CBDC available? Well, it's to use public blockchain infrastructure rather than try to create like some private database. This is all these just siloed transactions. That's not even really a crypto at all. It's not even decentralized by any stretch of the imagination. So if we're going to get a CBDC, I would rather be implemented on some sort of public blockchain infrastructure, so that at least it's not, you can't be just manipulated. I'll put it that way. And if it is manipulated, there's some transparency into that, because, at the end of the day, you could create a smart contract, that does this. And this is a big thing people get confused about all the time. They're like, hey, how's it going to work? Like, it's basically probably powered by smart contracts that are put on the network. And then that shows, how the CBDC works. Okay. And then if there's any kind of centralized, manipulation or centralized, like, interference, I should say. I don't want to say manipulation, maybe that's the wrong word, but any type of interference with transactions, then that would all be public. It'd be transparent, because that's another thing you got to understand about blockchain is not everything is it's really hard to make something completely censorship resistant that doesn't trade off something else, but you get this benefit of transparency where if there's something that bad happens, you can see that it happened. Everybody can see that it happened. It's auditable. Everybody knows what the rules are, okay? And if somebody does something that you don't like, then you know exactly who is to blame. So that is a benefit of using public blockchain infrastructure, is if, a middleman or an intermediary does something you don't like, you have proof. And so the last thing is the other reason people think that central bank digital currencies are sort of the anti-crypto is because they think it's just a way to basically just track people even more, get more information about people's financial transactions, and just have more granular insight into every single thing that you do and buy. And I totally understand that too. What is the answer to that over time? I think that's the incentive to move away from cash payments to more of these electronic types of payments. Again, I think if central bank digital currencies, if it's in their best interest to implement something like this, I go back to what I was saying before, which is it's kind of impossible, in my opinion, to really fight that and resist it completely. And, what should you do about it? Try to fight for a solution that's the best compromise that you can. So let me know what you think in the comment section below. Are CBDCs a good thing? Are they a bad thing? Would you use a central bank digital currency? Is it a big deal they're using Ethereum? You think they're not going to use Ethereum? Am I totally crazy? Just let me know what you think in the comment section below. I mean, one really interesting dynamic of having a central bank digital currency is, what would happen to what would happen to banks right now? You know what I mean? Like banks that are basically connected, to the Federal Reserve System or central bank. Would you be banking with them, or would you just have like a Fed account? That's the question. Is do they want you banking directly with the Fed, or do they want you, banking in your own bank? Be your own bank. That was the initial crypto pitch. Probably not a very good pitch. I don't think people want to be their own bank. That sounds, they want to give somebody else responsibility over their own money and blame them if they lose it. That's why I don't know about most, I don't have the data on this, but if I had to wager, I'd guess that a lot of people watching this video have their money on a cryptocurrency exchange and not in a custodial wallet, at least some of it, because they want to blame somebody else if they lose money. So let's see here. Somebody says CBDCs are 100% going to be upgradable proxy contracts, and the fact that they are smart contracts means nothing. Yeah, I understand that perspective. Yeah. So what they're saying is like, he's talking about the upgradable proxy pattern. This is basically a way that you can have a smart contract that points to a different implementation, which means basically you can upgrade the code inside of it. That's a common misconception with smart contracts is they can't change. So here's the thing, smart contracts, a simple smart contract, like once you put it out there on the network, like if you just write, like if you're taking the tutorials that I've done on my YouTube homepage and you like tick those and you put it out on the mainnet, you couldn't change the code of that, okay? But you can design smart contracts in a way that they like talk to other smart contracts, almost like if you're gonna write an object-oriented program or something like that, where you compose the smart contracts to have multiple pieces, okay? Like the outside piece that everybody talks to, the address, like that can call other components underneath the hood, and then you can swap out the other components underneath the hood, okay? And then like point to different smart contracts and actually upgrade the network. That's what he's talking about here. And so he's saying that like, hey, a CBDC, they're just going to do that. They're just going to upgrade the components. Yeah, totally get that. Now, but the still benefit here is that it's still transparent. Like you can see that they did it. I know that doesn't prevent somebody from doing something you don't like, but at least there's transparency into the process, which is a value add over just a complete black box. I know that doesn't completely instill confidence in people after that, but it's still a value, in my opinion. Somebody says a slippery slope, considering all things, will be fooled again. Do you think a CBDC will be an upgradable proxy contract? Perhaps. Somebody says ETH is the platinum standard for CBDC. I could definitely see that. And that's one of the reasons I'm so bullish on ETH long term. We're still scratching the surface of what we can even do with blockchains in the first place, okay? We definitely have seen a big boom cycle. I know a lot of people are thinking that we're totally in a bust right now in some crazy long bear market. It's definitely been a boom and bust cycle. We don't know the depth of the bust so far. But every time this happens, like we have this huge wave of technological innovation, and that shows, what we can do, and we're just scratching the surface, okay? And, we've seen during this bust time, we've seen a lot of stuff that kind of rose to prominence and get a lot of hype over the past, 12 to 18 months kind of start to diminish, significantly, especially on chains and ecosystems where that was kind of just copy and pasting where a lot of innovation was, and a lot of that innovation was happening on top of Ethereum. So here's what I think is going to happen long term is like we basically have two major use cases for blockchain technology that have proven to work, okay, and that, in my opinion, will continue to just, we're just scratching the surface on what we can do with them. One, I'm going to kind of put it into a broader, there's a lot of use cases within this, but one of it is just ERC20 tokens and what you can do with cryptocurrencies, so like DeFi, savings and lending, any financial application. Finance is a pay-to-play system, okay, payments, all that type of stuff. There's lots of ways that we can do better, faster, cheaper with finance, with blockchains, okay, and get those benefits that I was talking about, like transparency, trustlessness, permissionlessness, all that type of stuff. Now, a lot of the hypey DeFi stuff that where it's just like Ponzi yields, of course, a lot of that's kind of blown up and dead. So some of it, not everything, right? But like you just, what I'm saying is you see these hype cycles to kind of like go around, and you're always kind of like chasing that hype cycle to get that next thing. But we have, like, we're talking about central bank digital currencies, what you can do with finance, and so like all that stuff is highly concentrated around the Ethereum ecosystem, especially on Ethereum itself. And, especially as layer 2 start to come out in full force, those use cases are not going away. Like tokens and decentralized finance are not going away. NFTs is the other big one. They're not going away. Now, does that mean every NFT collection is going to hold its value and not get severely devalued during, this time right now? Not at all. Like a lot of NFTs are going to go straight to zero. In terms of like profile picture stuff, digital artwork, a lot of it's going to just evaporate. But like we're just scratching the surface of what we can do with NFTs. Like talking about real estate on blockchain, like NFTs are a perfect use case for that. There's lots of ways where you can improve the efficiency and the cost of real estate transactions with non-fungible tokens. We already have the scale to do it. Okay, you could take the entire U.S. real estate sales volume and put it on the Ethereum main chain right now without like compromising the performance, okay? Now, the scale's not the issue with real estate, it's regulations, So that we have to get those problems solved before we can, move into that. So anyways, the whole point I'm making here is Ethereum has a massive network effect and some already killer use cases that we're just getting started with. And it's just a matter of time, in my opinion, before these things really gain traction and wider adoption than they already do. And the central bank digital currency pilots are pretty good proof of that. Let's see here. Somebody say Robinhood soon to add Web3 feature. What are the thoughts? Yeah, so definitely Robinhood's talking about having a Web 3.0 wallet. I think it's a logical step. I mean, Robinhood's probably seen the demand of crypto from their users. I think I saw something about the earnings, like the Dogecoin stuff last year when it went absolutely nuts, was insane. It was an insane amount of like Robinhood's profit from trading fees for that particular year. I can't remember what it was. So they're seeing lots of crypto demand, and I think turning into Web 3.0 wallets definitely makes sense. I'm curious to see how much traction that gets. Let's see here. What I think about EVM Bitcoin side chains. So I mean, we'll see. Like a lot of the apps on Bitcoin, I just haven't seen the traction. You know what I mean? To be convinced just yet. Send financial advice, please. Sorry. So as Robinhood has low trust, from me. Yeah, yeah, definitely. I mean, I'm not signing up for a Robinhood account right now. I don't have a Robinhood account. I'm just thinking of existing Robinhood users, who would potentially get onboarded into Web3 through those means. Because the more, think about it this way, like an estuary, right? An estuary is like where all these rivers come together and then flow into the same spot. At least I'm pretty sure that's what it is, not the opposite. Let's just make sure I got the definition right here. Yeah, so basically a water passage where tides meet the river current, especially at the arm of a sea. Yeah, so basically where they flow into the sea. So think about it like that. I misspelled it. So think about that like that, like all these like rivers that flow in the same spot, and that same spot, like the ocean or the sea in that case, is like the entire Web 3.0 space. So you got people coming in from Robinhood, you got people coming in because they saw their buddy like buy a new car because he flipped Dogecoin. You know what I mean? Last year, you got people who, saw something about Bitcoin in the news. You got people who are already using Coinbase who now are able to use the Web 3.0 ecosystem straight from the Coinbase app. We saw that yesterday in our stream. Like Coinbase routinely hits like, top 10 app in the App Store whenever crypto prices are going up. It's a big, like all those things are just a massive funnel that pulls people into the same space. And that's just sort of like, the waves of adoption, okay? People need multiple impressions with something before they usually end up converting to a user of that thing. Basically, they multiple touch points where they see it, they all these different experiences before they finally go down the rabbit hole themselves. And a lot of people are going to get burned by it and leave just like they did, right now with the current boom and bust cycle. But at some point you kind of get this big inflection point where it gets this staying power. And that's what happens every cycle, is like people come in and get burned, but then you have this brand new like cohort of people that are retained. The retention's actually pretty good, especially among technical people. Like that's how I got into crypto in the first place, by watching cryptocurrency prices go up. I say crypto, I mean blockchain development. Was watching cryptocurrency prices go up. That's what got me interested. Then I went down the rabbit hole of the actual technology itself and saw that it was like really crazy. Okay, and that's when I learned to code for blockchain. I was already a developer already, but I saw all the massive opportunity in the blockchain space, and the rest is history. And that's actually the story for a lot of developers. We've seen that in the electric capital report. I've done some studies on that on my channel, where basically we see how many people come in every cycle. That price tends to attract people. The data pretty much shows that, and that we always have this retention of new users who stick around, even though we have this massive drop off after prices tend to tank. And those people are the ones that end up helping us build the wave, build all the technology that fuels the next wave of adoption. So Mike says, I would love for somebody to build a tool that makes debugging Solidity easier. Truffle as a debugger, it's not great. Why can't someone just make console log for Solidity? Yeah, I wish that the Solidity programming language had put some sort of console logging or printing functionality in the actual spec itself. It is kind of annoying. You can do it inside Hardhat. So Hardhat has a console log library that you can just add to your smart contracts. Yeah, Hardhat has console log. Um, All right, let's take a look here. Take a look at what's going on in the crypto markets. Wow, we actually have a little bit of green on the 24-hour time frame here. Not too much to write home about just yet. Bitcoin's still trading below $30,000. We got down to something like 28 something yesterday. We got down to, let's see here, 28,772. Okay. Yeah, I mean, we're definitely getting some sideways chop right now. Yesterday, we saw another pretty red day in the stock market. Okay. Let's just pull it up here. I think it was one of the worst days across some of the major stock indices since I can't remember. Now, here's the thing. I've been saying this over and over again on my live streams. I don't think crypto is going to rip off into infinity while, there's so much uncertainty what's going on with the macro scene. Okay. Stocks having some pretty red days. I mean, I think the best case scenario is for crypto to hold the line in this case, but I saw lots of people on Twitter yesterday cheering on like crazy because, crypto is now decoupling from the stock market because we've seen such tight correlation with it as stocks have been drugged down. And we're starting to see on really, really low time frames, like crypto kind of break that correlation. Now, I'm not going to get too excited about that. Okay. But it does give a little bit of hope that we haven't just completely nuked down while the S&P while the SPY and lots of other, the QQQ have all just taken an absolute dump yesterday. So we just need time until we see obvious signs that the macro scene is improving. Well, it's actually like our QQQ is looking at. We see a little bit of green, okay? And so maybe that's where our correlation is. Maybe our correlation's with basically tech stocks. We're trading Bitcoin like a risk asset. And if risk assets are stopping, to just get decimated, then maybe it's all the same thing, which makes you kind of wonder. It's like, why are people going to buy crypto when they could just buy tech stocks? But I still think there's lots of reasons why. I still think people are going to be betting on a bigger upside potential for crypto just because they know the prices can increase really fast. I mean, tech stocks can too, but it's going to probably be a slower grind than let's put it this way. Whenever crypto makes its move, I'm not saying it's going to be now, but I think I think let's put it this way. I think I think crypto can get back to like Bitcoin can get back to its all-time high a lot faster than like Shopify could after it got beat down by close to 80%. When it starts moving, I mean, from the time it starts moving to the time it actually remains its peak. Now, Shopify might get back to its all-time high before Bitcoin does in terms of actual time from now. Okay, but I mean, whenever crypto starts to make a move, I think it can. We've seen it happen in the past. I mean, we've seen Bitcoin absolutely skyrocket in really short time frames. Now, the one thing, I almost even hesitate to say this, you know what I mean? Because I don't want to give anybody false hope. This is not financial advice. This is really just speculation. I'm stressing really hard speculation here. Is almost nobody online is expecting, it wants to say with any confidence that the capitulation event we saw over the past week was a crypto bottom. Okay, I'm not even saying that I'm saying this. Okay, I'm just talking about speculations. All right. Almost every major crypto influencer, technical analyst, every macro commentator, everybody, especially the ones that were horribly wrong at the end of the last peak, okay, almost all of them are like too scared to say anything about the state of things. And I realize I'm kind of putting myself in that camp, but like I've never been the one to be like, hey, this is exactly what's going to happen next. You know, I'm always just kind of looking at the outlook of things. But everybody in that category, like almost nobody wants to say like what we saw was a bottom. Everybody's like, we just don't know, and it's like just doom and gloom, and almost like we absolutely know for a fact that we're going to Goblin Town. And you know, it's almost like Max Payne would be that thesis being completely wrong, and all those people like being on the sidelines and having to chase, you know, a pump back to all-time highs. Because like I said, I don't pretend to be a macro expert by any stretch of the imagination, but there is a possibility that like what we saw over the past couple weeks was a bottom. I'm not saying it is. I'm entertaining the possibility that it was. And sometimes markets tend to do things that nobody expects. Okay. So how I could potentially see that being the case is like if we actually did see inflation peak, you know, back in March and it's coming down, and, you know, the Fed raising rates basically did this massive shock and awe. I mean, the major stock indices are already down an insane amount. Okay. A lot of people are saying like the last sort of thing, like if stocks have been crushed, you know, if new mortgage applications have gone down, if like new building construction permits have gone down because, you know, interest rates have increased like crazy on 30-year mortgages, you know, like if crypto's been hit, if everything's been hit, we're seeing massive layoffs and like, you know, some of these companies, Target's earnings are down, their inventory is too high, blah, 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 blah. Like, and the last major thing to get hit really is like a lot of the major commodities, especially oil. And so there is a possibility where oil has peaked. Okay. Like there is a possibility. Again, I'm not a macro expert by any stretch of the imagination, but there's a possibility that this was the peak for oil prices and that prices start going down. You know what I mean? And that what we saw ends up being the bottom. There's a possible that the dollar strength has also peaked. There's a possibility. There's a possibility as the bottom. I mean, the sentiment across social media, sentiment in the news, there's the max fear, everything. Like the massive sale volumes, are seeing massive hedge funds, Melvin Capital absolutely blow up and get wrecked and get liquidated. There's a chance that was it, you know. And Max Payne would be crypto slowly grinding back to all-time highs. Well, everybody's just sitting around waiting for 10K or even 20K, and it never happens. So let me know what y'all think down in the comment section below. What's the best resource to learn Solidity? Definitely go to my YouTube homepage, find those free courses there, pick one you like, get started learning how to build something from scratch, learn by doing. So let me know what y'all think. Are we, have we bottomed? Are we still going to go down to 20K, 10K? And here's the other thing is like, you get all these people that try to say like, well, the past basically has to repeat itself now. And then we have to do exactly like what we did in 2018, which is form this, you know, really flat line and then try to like, you know, push back higher. And then all those, you know, attempts to push back higher get rejected off the moving averages. And then we form this shelf. And then we puke the guts down another 50% drop, and then we restart the bull market, okay? The problem is, like, all that's, like, that starts using technical analysis to explain what was happening, when technical analysis just is a reflection of what actually happened, the price itself. So, like, that completely denies the underlying factors that caused those things to happen in the first place. And this time is completely different because we've never seen a mixture of economic factors that are facing right now. And so that's why it makes it so hard to tell exactly what's going to happen. And so everybody who's super deterministic about things just puking further from here, I think it just fails to. It's just too doom and gloom. Now it could happen. Like I said, I'm not saying it can't happen. I'm just saying the market would definitely defy a lot of people if we had a bottom and we start slowly grinding back up. Because the other reason I think this is different from the 2018, 2019, phase is like nobody's sitting here going like, oh, crypto is just dead. Mainstream media will say that type of stuff, but I think there's an insane amount of cash sitting on the sideline or stable coins that basically is like, well, hey, we know this crypto thing has got a bright future ahead of it, and we're just waiting for a good entry. Somebody says TA is astrology for men. I like it. Somebody says, I think we may get to 35K, then drop back to 15 or 12 before we start the way back. I mean, it's possible. But I think that I think that starts to do what everybody else expects. And basically a when people start to expect things is when markets tend to not do them. Who on earth, if you came into the crypto scene before, let's say before May of 2021, which I realize a lot of people are new, but let's say you came in the crypto scene before May of 2021. Name one person who is like, oh, Bitcoin's going to double top. Nobody said it. Nobody said that. You can't find one person with a time-stamped prediction that Bitcoin was going to double top. So, and that's what happened. So likewise, it's almost like whatever's going to play out next is probably something that nobody's talking about. Somebody says everybody's expecting a 1 to 2 year bear market with lower prices. I think is BS. Because that's the other thing is, how often do you see this floating around where it's like, hey, what happens in a bear market is prices dump and then you have this long reaccumulation phase before you enter into a new bull market. It's way too deterministic. It's way too, oh, I know exactly what crypto is going to do, and so I'm just going to wait for my golden opportunity. But what if that golden opportunity doesn't show up? Is USDC the safest? So, I mean, it's, I don't want to call really anything in crypto 100% safe. There's always risk with everything. Basically, I'll put it this way. USDC is the stablecoin that I use the most often. Personally, that's what I do. So not advice for anybody out there watching this video, but that's what I personally do. Nothing in crypto is 100% safe. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps the videos out. So the more we can learn about blockchain. And if you're as fast with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. Somebody was asking me a minute ago, what's the best way to learn Solidity? Definitely go check that out. Find those free courses there. They're like Udemy courses, but they're totally free. And if you'd like those and you want to take the next step, or hey, maybe you'll take a master shortcut entirely, actually become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time.